Oh, hello. Welcome to the closing beat, everybody. How you doing out there today? It helps if you turn the mic on. Operator error. We are financial advisors here at Jazz Wealth, and thankfully we're better at numbers than we are at technology, and I am happy to be here with you. A busy day, right? A lot going on out there. You got the Fed raising rates. We're just going to get right into it today, you know? No goofing around here. We have a Guess the Dow update? Anything? No?
For it, but
No
picture for it. But yeah, we got Vanessa T currently in the lead, Victor P in second.
Okay. It's not the Victor P that I thought, actually. The Victor P let me know. That's not me, bud. I said, well, you got to play the game.
Oh, okay. Well,
but we like Victor P's.
I guess we have two Victor P's.
Yeah, we like Victor P's.
We got a couple Victor P's. He's been looming, so he's there. And then yeah, a lot of close guesses there.
Okay. And ETA on a graphic for this?
It'll be on our social afterward.
Day or two. We got it. All right, man. We'll go play. Guess the Dow. jazzwealth.com/guess the Dow. If you'd like to play, it is free. No strings attached. No spam attached either. So the Fed raises rates here. Is it the end of rate hikes? Maybe not. Did you see what he said? So let's just start with this. So we're now basically... here is something cool you can look at. This is the range, and we say the upper end and the lower end of the range. It used to be that the Fed just had a target rate. Now they have a target range, right? And so it's usually a quarter point wide. I don't think it's never been wider than that. And so where we stand now, if this were to be updated, we're at 5.25 to 5.5. That's the new range. We have a lower limit and an upper limit there to give them a little flexibility, and because of how they do the voting now, it's a whole thing versus what it used to be. You go back to 1994, it's the first time we're able actually to plot this stuff here. Basically, it means that we're above this high now in terms of rates. So if you were, I don't know, maybe not born, but if you turned 18 before 2004 and a half, then you've never seen rates this high, or you are soon to never have seen the rates this high. We got 1 point to go. 6.5 was the upper end over here. That would officially be the highest in a generation. Of course, we've got a point to go, but I say that because Jerome Powell was like, you know, we're just going to take it as it is. If we need to raise rates again, we will. Tough talk for rising rates there. So maybe not the end of the rate hike. It is largely forecasted that there will be no more rate hikes this year, and the Fed cuts won't start till the end of next year. This is all just, you know, we're just guessing at this point. That could be adjusted a million times. The reason I'm disappointed is because I thought, hey, let's put some stuff together here so we could talk about the end of Fed rate hikes. There's a lot of interesting things that happen wrapped around this. If we go over here, if we look at the sector and stock market return after the end of Fed rate hikes, let's say this is the end and they just don't raise anymore, very favorable returns for the S&P. So I've got the S&P plotted here. Try to squeeze this in just a little bit more for you. Darn it. Darn it. I won't let that bother me. I'm going to let it bother me. I'm sorry. It bothers me. Okay. So 1984, when they stopped that cycle, 11% gains. You got 10 double digits basically all across the board, besides 2000, the dot-com bubble bursting. I actually broke it down even further. I've shared this with you before. It's just updated. So if you look through the sectors themselves, you go, is there a particular area of the market that I may want to focus on when Fed rate hikes are finished? Well, if we do it by median return, then that's going to be utilities and communication services, formerly telecom. And so that would be your better area to look if you're interested in the greatest possible return. If you're interested in the greatest odds of having a profitable outcome, you would actually look at financials. 83% of the time, it's just that guy right there. 2018 was when it was lower, but other than that, you got good returns here, at least that you didn't lose money at those points. So 83% success rate. Where you do not want to be, and I could probably argue this time, but materials. 17% of the time at the end of a rate hike, for whatever reason, materials just don't participate. Median loss of 3%, 4% for energy. You may have a different scenario here, but of course that's dependent on, does the Fed actually, stop raising rates? We don't know yet. So I had all this ready, did my homework, and I was like, great, here we go. Maybe something to talk about. No. We're going to have to hold that slide for another time. One of the cool things, by the way, if you ever look at the end of a Fed rate hike cycle at housing prices, would you tell me that housing prices likely go up when Fed rates are at a high and they stop raising rates? Or would you say that they go down at that point? I would have hinted towards down. You know what I mean? I would have just thought, okay, it's a tough lending environment. Maybe they'd have gone down. In truth, no, it's actually mostly higher. So here's what you're looking at here. When in hindsight, we can tell where the official peak in rates were. We can't do that now, of course. But if we look back 12 months, we can see the performance of home price. In other words, the growth of the home price itself across the U.S. If you look forward, after the end of a rate hike, prices gravitate higher. There's only one case. They all gravitated higher, but in one case, they faded away towards the end of that 12-month period. Otherwise, you got a recipe for higher prices. Do you believe that? Does anybody think I made that up? I don't blame you if you did. I didn't make it up. It's in fact truthful, but I don't know that I would believe that so much. It feels different this time, doesn't it? Well, that's a tough one. And the sample size is small, by the way. So you know what I mean? You got to kind of discount that a little bit. A small sample size for a study is never a good thing. We'll see what happens. Okay, so looking at the S&P here, basically we're sitting at about 19% year to date. We have stalled out a little bit at these highs there. What I want to point out is something different that we haven't, I don't think we've ever talked about. I'm always looking for interesting ways to share data with you. We have the S&P sitting up here about 19% year to date, but the percentage of stocks that are overbought by the traditional technical standard, one standard deviation over his 50-day moving average. So overbought stocks relative to the percentage of stocks in the S&P that are oversold by the same metric, just in reverse. So instead of being all like, oh, 60% of stocks are overbought, let's look at like a history of that and see what happens. So this is going to be a different thing that maybe you've never seen before. Here's where we stand currently. As of today, 64.8% of the entire S&P 500 individual stocks, 64.8% of them, are considered overbought. That may not mean anything. An overbought stock can continue to be overbought, right? Apple's a great example. Meta was a great example for a while. It can just, the trend is your friend. It can continue. 4.2% of the S&P is considered oversold. In other words, extremely oversold, just like horrible, refuses to bounce off the lows. Just a handful of stocks. So, okay, that's one thing. We look at the spread and we say, well, there are clearly more stocks overbought than oversold. Does that mean anything? Do I care? Could it not be 70%, 80%? Clearly it can be. Look over here. Well, what I did is I said, okay, let's plot it and then let's go back in time to see what the pullback was at this peak. So, for example, if you go back here towards the end of January 2023, you had an 8.3% pullback from the peak to what ended up being the low in March. And I can show that, actually. Let's do it this way. So here is the S&P, and here is the area in question. From the peak, this is at that point where you would see we have an overbought reading where more than 50% of stocks were overbought. What happened to the performance of the market after that? We could bounce over here and say, well, from high to the March low, right? I'm a little off with my mouse here. We got about 8.3, 8.4%. So there was a pullback, basically in about a month too, by the way. All right. So that's something. All right. If we look back further, the last time we saw a peak here, notice the peaks have been getting less and less. But if we look back, we had a 3.4% pullback, which took us to the end of the year. And that's largely where we had pulled back. Now, can I just show it? Time frame, 3 years. Let's go by the day. Let's see what happens here. Nothing. Hold on. Hang with me. I'm going to say time frame. Let's just do 2 years by day. Okay, here we go. So we come back over here, right there. So that takes you through the end of the year, right in here. That's all we're looking at there, just a small pullback. So when I'm pointing at this where we were overbought, small pullback. If we go back to the middle of July 2022, you just keep going if you want. I just wanted something simple to share with you guys. We had a 19% pullback, which took us to this, what is now known as the ultimate low, right? That was the October low, and that's what this pullback was from a peak of overbought stocks to when obviously that pulled back. In other words, when you're looking at this, is this a reason to sell the market? Probably not. There's no reason it can't go higher. We know that. It's obvious, and we can see that there. Has there ever been more than 80% of the stocks in the S&P overbought? In other words, just refused to pull back? Yes, there has. That sadly took us into major financial crises and dot-com busts and the 1987 crash and all of that. But we're not there, are we? I hope not. So all I'm telling you is it's a warning sign, right? It's a little bit of a warning sign to say, do I want to hop on the train now? That seems a little excessive that I want to do that. Go back to the S&P and you say, well, of course, right? Prices, they've done so well. Let them have a break. That doesn't mean they can't scoot up just a little bit more and drive you crazy and have 70% of stocks overbought. But I wanted to point that out as something different so that we can look at that. All right, moving on. Here's a fun fact, actually. So in the S&P, we have 55% of all days so far this year, right? If you look at this, start at the beginning of the year and go, was it green or red? If it's green, put it in this column, red, put it in that column. 55% of all days this year so far have been positive. And we're up basically 19%. Okay. The NASDAQ has had 55.7% of all days so far this year positive. How much is that one up? 41? 41%. That's called volatility. That's a great lesson there, actually. The same number of days were positive. However, this did way more than the other one did. Volatility, right? That's exactly what that is. All right, let's take a look over here at the Dow. I'm full of fun facts today. The Dow, this one actually is 54.3% of all days are positive. However, it's only up, 7% after today. So look at the difference in volatility there. Here's a fun one, though. This is going to be day 13. And I thought you probably would see this on the financial media there. It is the longest streak, 13 days. It ties for the longest streak, second longest streak, January 20th, 1987. Okay, so that's how long it's been since we've seen 13 straight days up. Now, you could just go to your regular financial media for that, but I thought, well, let's go one step further. You know what I mean? Let's just give the people a little something. It's a free show. Nobody knows who I am. Let's give them something to remember us. What is the longest streak ever that the Dow has managed to accomplish? And this is not a joke. The longest streak is 14 days. We're 1 day away from tying like the all-time record. What a great time to be alive, right? Like, that's crazy. The longest streak was 14 days, and it ended in June 14th, 1897. So just to give you an example of how rare this really is, you're talking 18, if tomorrow we finish up positive in the Dow by some blessed reason, I don't know, that'll be Thursday. And if we go one more day on Friday and we get to 15, that would be a record broken that was set in 1897. I mean, that was cool. So I just thought that's a fun fact you can share with your friends there and, sound cool and all that good stuff. All right, let's move on to some stocks in the news because it's all earnings related here today. Microsoft basically had good earnings there. They beat on earnings, beat on revenue. Slight weakness in the cloud division. We're all focused on cloud just like on Apple. We're focused on services, right? That's where the easy money is made. The cloud business, their growth was expected to be somewhere around 20-something%. It only came in at 9%, so a little slowdown there. That's probably why the stock was lower. Amazon, I guess the FTC is looking to try to break the company up. They're going to go making that discussion again. So that is getting filed. It'll be an antitrust suit when it comes out. Actually, I don't have a date when it's going to be filed. It's sort of rumor right now, but it looks like that's coming up, something to focus on in the headlines. Wells Fargo raised their dividend to, now it was at 30 cents. You can see that. They raised it to 35 cents, and they're buying back 16% of all shares out there. $30 billion. Why? Because they passed the stress test. They can do that. That GD stock, that's what we used to say with that one. General Dynamics, obviously breaking the downtrend here, looking pretty good there. This was a great earnings report. Like I don't often spend time on this one here, but it was a great earnings report. What was fascinating was their backlog. Remember I mentioned that the other day? We're talking about stocks that have a backlog. It's kind of a good thing as long as your margins are good. Their backlog, $91.4 billion. They made a special note to talk about that one there. Just like Raytheon made a special note yesterday about their engine issues. So Boeing, this was expected to be a little bit of a loss, and it did turn out to be a loss, just less than expected there. They also had, I was digging through this earlier, they had $2.6 billion in free cash flow. We were expecting a negative number there. Just think about that for a second. I always jokingly say, treat your personal finances like a balance sheet, just like a corporation treats theirs. If you think of it like a balance sheet, all of a sudden there's a lot of opportunities. There's things you can do. Whereas if you think like, now you got to make it through this, but if you think the Dave Ramsey route, Susie Orman, whatever, there's a process to really get your dough straight. Beyond that, once you pass all of that, okay, now start thinking like a balance sheet, because now we have different strategies. So imagine you're Boeing and your personal finances, you're like, whoa, this quarter, I don't know that we're going to have any free cash flow. And then you just, well, what? 2.6 billion. All right, it was there. It's awesome. Come on. How awesome is that? Also, if you follow Jazz After Dark, their M-score, give you a little hint, something you may want to check out. 2 days ago, we did on Jazz After Dark. Their M-score is very high. What could that possibly mean? It's a warning sign. Coca-Cola. So they beat on earnings and everything, but the whole beat for Coca-Cola was because they jacked up their prices. You probably saw it in the store buying your Coke and stuff. They jacked up the damn prices. Well, they said, we're going to stop raising prices. So volumes were not impressive in terms of any organic growth, but because they were able to charge more, we beat on earnings. That's exactly how that worked, and they kind of ruined it by saying they're going to stop raising prices, but I'll believe it when I see it. Lastly, you got Hilton here. So I'm going to point that this is not a stock we talk about a lot, but, so be it. I'm going to talk about this one because we were just talking about Alaska Airlines and their average revenue per available mile, right? So the amount of money that they make per passenger per mile that plane flies. You know the hotels do the same thing, but they call it revenue per available night. I think it's revenue per available, like actual night that you rent. There's a word in there I'm missing. And so they track that one there. The revenue per available night didn't really do anything. Nothing. They didn't have more revenue per person per available night that they have a room, but they were able to charge you more. So good job, Hilton. Apparently, we're still all willing to go out there and travel and stay at Hiltons and everything like that. And so good for them. I just thought it was cool because we normally will pick on a stock for whatever the metric is we're focused on. I just mentioned services with Apple, subscribers with Netflix is the easy one. Well, revenue per available rental night. Actually, I think that's it. Revenue per available rental night is how they do it. So anyways, thought that was cool. Something else you can look up. I'll take your questions here if you have any questions. Otherwise, tomorrow we got Bristol Myers, Carrier, Honeywell, Southwest Airlines, getting back to the airlines there, MasterCard, McDonald's, Valero, and then after hours is the excitement with Ford, Intel, Mondelez, and T-Mobile. Live Nation, too, if you want to hear more about the fee debate that all the kids are mad about right now. That'll be your earnings tomorrow. And those mortgage rates, yeah. It's not looking good there in the short term for them. I will mention, it's not much. If this is helpful, I don't know, but rates actually did tick just ever so slightly lower today. Not by anything you're going to notice, but at least they did. So we didn't see them, fall apart. How is FedEx stock up there? So I didn't see that. I started reading something about that last night. I thought they agreed to a deal. What do they call it? A deal in principle. Does that off the table today? Did I miss it? I was so focused on the Fed. So I missed that one. If something's changed there, yeah, negotiations starting over there. So they did actually reject it. Wow. What a time, huh? You got American Airlines dealing with their stuff, UPS dealing with their stuff, United Airlines, right? I mean, if you're going to strike and you're going to work towards that, summertime's not a bad time to do it, right? If you're on strike, do you still get the buddy pass? Paul, 3 questions we should ask an advisor. Not 3, it's 4. It's always 4. 4 questions. And are you asking me, or you want me to tell you what those are? Or? Let me see what that answer is. Dim is just continuing dollar cost averaging, building up supply of cash to put to work when it falls apart. How are you doing both of those? Meaning like you put 50% in and you hold back 50% in cash is what you're doing? If I had to choose AT&T or Verizon, where would I put? I can't actually say which one is better. I would say that in this case, I would find more activity in Verizon versus AT&T. So it's minimal, but the difference I like activity. I want to see the stock move around. That's why you don't talk about Ford all day long, because it's kind of boring, right? Or Sirius XM, right? It would just be kind of boring. So for the amount of activity, I would go with Verizon. But I can't tell you, like, I would buy that one without getting in a lot of trouble. So Tom says, hey, Dustin, in the past, you said when rate hike cycle ends, had the sectors there, they outperform year or year. Your chart today had XLB at the bottom. Had XLB at the bottom. The materials at the bottom. So this is at the end of rate hikes. I think you might have been mistaken that one for after the rebalances, maybe. That was the most recent thing that we did. But this one is based on looking forward a year after the rate hikes. So these are the only ones we have to go on here, at least that I can get. So maybe, or I could have said something. Maybe I mistakenly said something. Yeah. Does Biden deserve any credit for the handling of this economy? It's not my place, really. I don't know. The economy, that depends. Well, you think the economy is good or bad, or what's going on there? I don't know. Can you share NVIDIA earnings stat? I'm sure he would take credit. Of course, like if I'm the president, yep, inflation's going down. I would do that. I just would get the number right, Joe. You know what I mean? I wouldn't say 0% inflation. I would actually remember the number. But other than that, yeah, why not take credit? That's kind of like a perk of the job, right? When things are bad, you go hide, and then when they're good, you go, that was me. I would do the same. NVIDIA earnings stats. No, I can't. I don't have my thing in front of me here. I have everything for tomorrow. Usually that's what I do, by the way. So whatever's coming up in the morning or the evening, I'll have that over here and ready to go. So if there's any of those you want to talk about, I don't have the other ones. I don't look usually outside of the extra day. Hey, Tom, how come Powell wouldn't answer any questions today? Just kept on saying, I won't talk about that today or data dependent. I think he was trying to be really clear, to be honest. He's never been one to completely avoid a question, so I won't rag on him for that. I think he was trying to be really clear that from this point forward, we're going to need something to tell us that we did a good job or a bad job. And he made a point, I think, a couple times to say, there's a lot of risk now on both sides of our equation. And so we're just going to focus on the data. We're not going to start throwing out ideas, opinions. And I love that. We're just going to say, when the data comes in, we will respond to that data. And, he made a point to say it's not just the inflation numbers either. They have the employment metric as well. Yep. What are 4 questions you should ask an advisor? So I was sort of bluffing there. I didn't really know, so I didn't think you would ask. If I were asking an advisor, the fiduciary one's an obvious, but you don't even have to ask. You could just look it up. So I'd probably ask something around that. Hey, how do you get paid? That's it. I mean, you got to get paid something. Just show me exactly how you get paid. That's all I want to know. The second thing I would ask is, do you do this too? Like, is your dough straight? Like, do you have some level of wealth built up? You might have different passions than me, but is am I going to find you living in an apartment like messed up because you didn't pay your bills or something, or you repo your car? You can even look that up, by the way. As advisors, if we get into personal financial trouble, it has to be reported. So you look up some people you hear on the radio and stuff, and you're like, oh, tough times. But that happens. I would also ask, how is it that you're going to do something unique for me, right? Instead of like some of the Vanguards and whatever, just kind of throw you into a bucket and hope you ask those questions. I'd be interested in more specifics there. And probably the fourth question, what would I want to know? Actually, the fourth question for me would be wrapped around something that meant something to me. So I would try to get something free out of the person, and I would say, okay, so in my life, I plan to buy 2 rental properties, and how can I best approach that? And I would just see if they would answer that question prior to hiring them. You know what I mean? Dustin's, hey, he says, can make 2 nest egg forecasts, be nice. Well, yeah, you have your current plan, and then you can do the proposed plan. That would be my best answer for now. Otherwise, you just let me know and give me a different email, and we'll just give you 2 logins. You could do it that way. Ask the advisor, what type of plane do you fly? Yeah. And do you fly it, or does somebody fly you around in it? Because, they're all doing that. Yeah. Yeah. What are his hobbies? What does the advisor do? Like, do you personally get along with that person? That's why we do a lot of this, is because not everybody likes me. I get it. But if you like me and we're working together, chances are we're going to be like on the same page. So I like that. Yeah. And Pandemonium guessed the airplane correctly. Very nice. All right. So the week is not over, by the way. Tomorrow and Friday, we go into economic numbers that are very numbers that the Fed said they wanted to look at. So they were very clear on that one today, and we're going to be getting those numbers as the week progresses here. So, yeah. You'd love an updated show on how to find a good CPA. Are you still looking for a good CPA to join Jazz? If I had any expertise in that, I would share it. Just like investing in biotech stocks, I'll admit I'm a failure. I can't do it. Finding a CPA that, I found some good ones, but finding one where I would say, okay, cool, this is your person. I guess I'm not very good at that. I've tried, and I'll keep trying, but maybe have to try some different tactics. All right, enjoy the rest of your day or evening, and yeah, that'll be awesome. We'll be back here tomorrow to see what's going on, and adios.